Pies are a really cool feature on Trading 212 and a great way to organise your investments. Actually, I don't think there are any other brokerages in the UK that allow anything comparable. There are a couple things you should know before you start making a pie though, and in this video I'll take you through the general process and give some of my thoughts along the way. Hello and welcome back to the Dividend Experiment, the channel that helps you build a portfolio that pays your bills. The content that we discuss is intended for information and educational purposes only, and should not be considered investment advice or investment recommendation. Investing is like solving a complex puzzle with each piece representing a different asset or investment opportunity. Fortunately, platforms like Trading 212 have introduced innovative tools to simplify this process, making it more accessible and intuitive for investors of all levels. One such tool is the Pies feature, which offers a unique approach to portfolio construction. Imagine your investment portfolio as a pie, with each slice representing a distinct asset or investment. With Trading 212's Pie feature, you have the ability to create customized portfolios, tailoring your specific investment goals and risk preferences. Whether you're interested in stocks, ETFs, or other assets, building a pie portfolio allows you to diversify your holdings and optimize your investment strategy. In this video guide, we'll go through the process of creating a pie portfolio on Trading 212, providing step-by-step instructions and valuable insights along the way. From selecting the right assets to optimizing your allocation, you'll learn how to leverage this powerful tool to enhance your investment experience and potentially achieve your financial objectives. As this is a beginner's guide to pies, there is a chance that you're new to Trading 212, and that also means there's a chance you missed out on getting your free shares when you open the account. When I asked subscribers of the channel, 57% of you said you missed out on getting the free shares, which seems like a massive shame to me. And because of that, I asked Trading 212 if they could give me a unique code that you guys can simply type into the promo code section, capital at risk. So if you've opened up a new account recently or planning to open up an account, here it is, DivXP or DIVEXP, short for the Dividend Experiment. So you have 10 days from opening your account to type this in and receive shares worth up to £100. I also get something as this is my custom code, so this helps you support the channel too. If you do use it, thank you for your support, and thanks to Trading 212 for sponsoring this video. Step 1. Get to know pies. Pies serve as convenient baskets where you can neatly organize and allocate your investments. Each slice of this investment pie represents a unique asset, whether it be stocks, ETFs, or other financial instruments. An important point here is that pies are what I describe as strategy-based rather than tactic-based. So when you build a pie, you choose stocks based on allocations. You want 10% of stock A and 20% of stock B, etc. Then, as you invest, you'll buy based on those target allocations. This means the allocation template is the goal you're working towards. This is in contrast to other investment strategies that are tactic-based. For example, you try to buy stocks that are undervalued, or when a stock hits a certain threshold. That's a little high level as a concept, but basically you can think of a pie as a template or instructions for your future money, and it tells it where to go in percentage form. Step 2. Figure out your goals. Before you start, think about why you're investing. Are you saving for something specific, like a house or retirement? Knowing your goal helps you pick the right investments for your pie. For example, let's say you're going out on a road trip. Before hitting the road, you'd likely already know your destination, right? Similarly, when it comes to investing, defining your goals is like choosing your destination. It gives your investment journey direction and purpose. If you don't have a goal, then you're just driving around and seeing where you end up. It might work out, or you might end up in Hull or something. Sorry to any people from Hull, but I had to choose somewhere. So why is it crucial to pinpoint your investment goals? Well, for starters, it helps you to tailor your investment strategy to suit your needs. Your investment approach will vary depending on whether you're saving for short-term goals like buying a house, or long-term objectives like retirement. Knowing your goals also helps you set realistic expectations. If you're saving for a down payment on a house you plan to buy in 5 years, you'll likely opt for investments with lower risk and more liquidity, maybe even sticking to cash. On the other hand, if retirement is your goal, you might be more inclined to tolerate short-term fluctuations in exchange for long-term growth potential. Furthermore, having clear goals can help keep you motivated and disciplined. Just as knowing you're driving towards a breathtaking view can keep you focused during a long drive, having a clear vision of your financial goals can help you stay committed to your investment strategy, even during market downturns or tempting distractions. Step 3. Explore investments. Exploring investments on platforms like Trading 212 means checking out all the different ways you can put your money to work. It's like browsing through a store with shelves full of options, from familiar big-name products to more specialized items. Each investment option, whether it's buying shares of companies or investing in funds that track the overall market, comes with its own features and risks. Taking your time to explore these choices lets you figure out what matches your goals. For example, if you're looking for steady growth, you might lean towards safer bets like well-established companies or diversified funds. But if you're okay with more risk for the chance of higher returns, you might be interested in more volatile stocks or funds. Step 4. Building your pie. Now it's time to put it all together. There are different options when building a pie. You can include up to 50 stocks in one pie. So let's do this step by step. First, log into your Trading 212 app. After that, you'll be directed right to the Trading 212 homepage. Then tap the logo or the icon that looks like a pie. And there you'll see your portfolio, including your investment, but that's not why we're here now. Let's go into the Pies tab. Then tap Create Pie. You'll be asked if you want to choose a ready-made pie or build a custom pie. And we're going to choose to build a custom pie. Now we don't just want to add random stocks, we want an actual reason to be adding them. For this example, I'll go through just a quick way on how to use a screener to find stocks that fit a certain criteria. In this example, I'll make a pie for high-yielding US stocks. And no, it doesn't mean that I recommend you invest in these specific stocks, I'm just using it to illustrate the process. We'll use Simply Wall Street Screener. I think it's free or limited access on free, but worst case scenario, if you can't access it, Yahoo Finance has a similar screener for free. While you're in Simply Wall Street Screener, you can filter out stock based on market, industry, and other advanced filters. And let's edit the advanced filter and set at least 3 requirements for the stock we're looking for to add in our pie. First, let's add the market cap requirement. In this example, we'll look for the companies that have $100 million market cap or above. For our second requirement, let's set the past 5-year earnings growth, which can be 25% and above. Now for the third requirement, let's set dividend yield from 7% to 10%, since we are looking for companies that give out high-yielding dividends. Now that we've already set the requirements we're looking for in the screener, it'll provide a list of stocks that pass the criteria that we set in our advanced filter search. Here are the stocks that pass the filter search. Now let's review whether those stocks are available in Trading 212, and then we can add them to our example pie. After reviewing, 5 stocks in our screener are available in Trading 212, so let's make a pie out of these. And let's proceed with the next step. Now that we've already distinguished available stocks from the screener in Trading 212, let's search for those stocks and add it to our example pie. Tap Add to Pie to include the stock in your pie, and you can continue choosing stocks that you want to include in your pie. You can search for them by name. Decide how much of each investment you want in your pie. The weighting is flexible, and you can do it by the size of the company or just how much of that company you want, but it just needs to add up to 100%. The next step is either to auto-invest or to do it manually. Choosing auto-invest will let you choose an investment schedule and automate your deposits. Whereas through manually, you'll be given an option to choose funds in your account manually. I also covered this on the channel, so if you're interested, you can look it up on the YouTube channel or watch this video in the top right-hand corner. And after that, you'll be directed to the investing plan of your choice. So let's say, for example, we choose 5 years with a monthly contribution of $1,000 and an initial deposit of $1,000. So in 5 years, your total capital of $60,000 will have a future value of $91,000 including returns. Or at least that's what it's projected to be. Let's try changing the years of investment to 15 years. And as you can see, in 15 years, your $182,000 investment will be projected to be $547,880 with these high-yielding dividend stock examples. And after that, you can name your personalized pie. In this example, let's name it High-Yielding Dividends. When you're happy with your choices and you're already done with your pies, you click Create Pie. And there you have it. You successfully created your own pie with stocks of your choice. In this example, we created a pie with 5 stocks that have $100 million or above market cap, 25% or above 5-year earnings growth rate, and have a 7 to 10% dividend yield, which we called high-yielding dividends. And now what's left is funding your pie and starting investing. Step 5. Keep an eye on things. Imagine if one slice of your pie grows much larger than the others, or if another slice shrinks too small. That wouldn't make for a very balanced pie. In investing, if one part of your portfolio becomes too dominant or too small, it can throw off the overall investment strategy. And that's where rebalancing comes in. So here's the deal with rebalancing on Trading 212. Basically, it's about keeping your investments in check. Let's say you start with a mix of stocks and bonds, but over time the stock portion grows bigger. Rebalancing kicks in to bring things back to your original plan. You can do it yourself or simply let Trading 212's tools handle it. Either way, you sell some of the high-performing assets and buy more of the ones that aren't doing so well. This is ultimately buying low and selling high naturally. And that's the full process for creating a pie on Trading 212. If you thought that the process of making a whole pie by yourself was a bit difficult, then there's also the option to copy a pie. Though there are some pitfalls or red flags that you should be wary of, and I talk about them in this video. Also, one more thing before I go. Although pies are a great feature on Trading 212, you don't need to invest via a pie. If you don't feel the need to decide an allocation and would rather build a portfolio as you go, then that's a very reasonable way to do it too. If you liked this video, and if you made it this far, I'm guessing you probably did, then I have some good news for you. I'm giving away my PDF guide to the 10 dividend investing commandments, or the criteria that I use to pick dividend paying stocks, and I'm giving it away to you for free. All you need to do is submit your email in the link below and it'll get delivered to your inbox straight away. Again, that's for free. But that's not the only benefit of joining the email. You also get updates on the almost daily dividend portfolio, interesting stock ideas or news, and special deals and free stuff that I can share with you. Thanks for watching, and I hope to see you on the next video. See you!